welcome to another video. My name is Infiniti Whitley and I am a life insurance broker in the states of Missouri and Michigan, and I am here in my home office today to talk to you guys about 3 really common mistakes people make with buying life insurance. And I know, there's nothing really interesting about life insurance, but it is one of the most underrated tools that we have at our disposal, and I feel like more people should know about the ins and outs about it. So that's why I do the videos that I do. Before we get in, if you would like this video, subscribe, it would really help the channel. And without further ado, let's get into those 3 things. So what I'm going to get into is going to pertain to life insurance in general, but you should really think about this in terms of term insurance, because that's what a lot of younger people go for, especially if you're healthy and you qualify for it. But it will also apply to final expense, right? So the first mistake that a lot of my clients have made is waiting until they're either married or waiting until they have children to get life insurance. And I'm here to tell you that you don't have to do that. Some people just don't see the value in life insurance until those 2 life events happen, and by all means, hey, that's okay. It's better late than never. However, if you want to save on those premiums, if you want to, have a certain guarantee for a certain amount of time, then you want to get those policies put into place when you're young. A lot of times you have an easier time applying for life insurance when you are young and single, because it's one of those things where you make your independent choice. There's nothing wrong with having counsel with your spouse, obviously, when it comes to making choices as important as life insurance. But I can say, in my experience for writing for both single people and couples, it was a lot easier to make it make sense when the person was single and they could go ahead and make that executive decision on the spot. So the thing is with that, life insurance can possibly pay off large debts, medical bills. Some of them have living benefits, which I will talk about in a future video. Let me know how much you want to hear about living benefits by leaving me a comment below. They can pay off like mortgages sometimes. I do specialize in mortgage protection. So there's a broad brush that life insurance can paint with as far as debt resolution, income replacement, things of that nature. And so again, by being younger and applying for it, you lock in that low rate. I know that oftentimes when I'm scrolling on the internet, just doom scrolling, a lot of times I will see other agents be like, hey, they will draw people in and be like, hey, get in here as low as $15. And while that's not untrue, that usually pertains to your youngest, healthiest people that get those rates. And so I don't want you to go into insurance and think that, hey, I am guaranteed this rate just because I am, applying for it. Because that's not the case. It does depend on your health, your income, and your age. So generally, taking out life insurance before you have kids or before you have a partner, it will take a certain amount of burden off of them later if you already have it in place, because you can simply go in at no extra cost and add them on as a beneficiary. So if something happens to you, they get the proceeds of the policy and they can, pay the mortgage, pay off whatever debts or whatever that you've left behind, and lay you to rest and have a peace of mind. And in some cases, I do have clients come back and be like, hey, I want to cover my spouse, my kids, and maybe some grandkids. And certain carriers do have those options. So I would just speak with your local licensed agent and see what they come up with for you. Another common thing that I deal with clients is that, let's face it, they think they're going to live forever, right? People assume that their health will never change, and some people are blessed in that way. However, for the vast majority, statistically, that is not the case. And so considering that with age you become more susceptible to certain things like, say, cancer, diabetes, that kind of thing, high blood pressure, things like that can affect the amount of premium that you are liable for each month when it comes to life insurance. And in some cases, some health problems will disqualify you from coverage. So the best way to beat that out is to get ahead and get insured before any of those problems spring up, and that'll help protect your family and you from any changes in your health. So again, I mentioned earlier in the video things about living benefits. Those are things that can help cover you in certain cases while you're living. So that's why I mentioned you and your family can benefit from insurance policies should your health deteriorate at some point. But let's face it, life is sudden and you never know what's going to happen tomorrow. So why put off tomorrow what you can do today? This is probably my number one rebuttal, number one, not really objection, but number one barrier to people getting life insurance or mortgage protection insurance. And this is, hey, I have life insurance through my employer. And that's great. Don't get me wrong. It is awesome. If you have those benefits, if you're entitled to them, take advantage of them. But it's not the end all be all. Let's just be so real about that. So a lot of people, they think they've made it big when they get these jobs that do offer them insurance. But what they don't really understand is that, yeah, you have this insurance as long as you're with the company and you're at a group rate and it's term, and it's only really equal to about your salary times 2, I think it is. Depends on the employer. But at the end of the day, it's really hard to get that life insurance that your job offers to cover your actual real life needs, right? So on average, I think it's about $20,000, the insurance coverage that you get with your employer. And that's great for final expenses should anything happen to you during your employment there. But the key word there is during your employment. What a lot of people don't understand is that the moment you get laid off, you quit, you retire, you're just no longer at the company, bye-bye goes all that coverage until you either get a new job or you get your own private policy. And then if you have some kind of pre-existing condition, it's often easier to get coverage when you're at your employer with your employer. But if that goes away for any reason, you're up a creek until you can find new coverage, and oftentimes that new coverage is way more expensive than what you were paying at your job, or maybe depending on the health condition you don't qualify for certain coverage. And so you want to make sure that earlier on that, hey, look into getting a private policy so that all your eggs aren't in one basket, right? Because I think we've all seen in the last decade where, hey, job security isn't what it used to be. And so you don't want to have your life, health, and whatever other insurances, bills, and stuff all in one basket. It's why a lot of people start businesses, so they don't have all their financial eggs in one basket. Insurance isn't much different from that. So it's always my recommendation that if you're going to work a job and you have benefits, cool, great. Maybe spend a little extra out of your paycheck to have a little extra coverage. It's never hurt anybody. Because again, going back to, if you lose said job or if you quit said job, you're uncovered between that time you quit and the time you find a new venture, new employment. And so what if something happens to you? Say if you just took out a mortgage, you got $450,000 out on a mortgage, and you just got a new car maybe 6 months ago. So you got the car payments going, and the auto insurance, and the homeowners, and the mortgage insurance, and whatever other bills and utilities. What happens if you become severely disabled, or if you, unfortunately, God forbid, pass away between the 2 to 4 months it took you to find a new job, right? Because oftentimes in that span of time, your savings are wiped, right? And so if it comes to a critical, chronic, or terminal illness, you can access part of your death benefit if your policy comes with living benefits to help cover payments or like be income replacement, things of that nature. If you pass away, obviously the beneficiary you set up gets paid out the policy, the proceeds, there we go, and they are able to take care of any kind of final expenses, any kind of large debts or whatever might plague the family in your absence. So Again, I guess the moral of that story is just don't leave all your eggs in one basket, right? There are benefits to getting insured early on, or even if you're not the youngest spring chicken anymore, there's still benefits to making sure that you have sufficient life coverage or additional life coverage for whatever. Because a little bonus, little tidbit, a lot of times I'll encounter clients that are like, hey, yeah, I already got life insurance, or I already got this, that, and the other, and I'm already paying out of pocket for it. Great, cool. When did you set it up? What did you have going on when you set it up? Because a lot of times people would have set it up maybe 10, 15 years ago. Cool. If you're on term, how long was that term? If you set it up 10, 15 years ago on a 20 to 25 year policy, your time's running out on that coverage, and you're going to have to renew it at some point in the future. And if you're like 55 years old and you got 5 years left on that policy, your premiums are going to be ridiculous as a 60-year-old. I'm just going to be so real. Unless you're super healthy, running marathons, and can qualify for those special discounted rates that some carriers do have, it's going to be expensive. So it's better to review those options now, while you're as young as you're going to get and while you're as healthy as you're going to be going forward, and just have that peace of mind. And I don't know, it's just really an invaluable thing to have. But anywho, I'm going to get off my soapbox today. I'm going to go talk to some more wonderful people. I hope this video was informative. I hope it was helpful. If it was, don't forget to subscribe if you're watching this on YouTube, or follow this page if you're watching this on Facebook. I will catch you guys in the next video, and until then, stay blessed.